Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning. Dee, Iman, Mark, Pooja, Tom. Great to see everyone in the room. An interesting market environment that we're trading in. So we have some updates on the crosses that we've been tracking here, specifically on the dollar crosses, also a couple of euro and Aussie pairs that we've been trading. I did bail on the Aussie position this morning for anyone who's been following along with that. I'll explain the thought process behind it, but it looks a little tired here. I still do like the longer, broader upside in Aussie. But there's a couple of near-term things here that looks like it could turn over near term. Long story short, 76, we still have a swing trade setup that we put out for you yesterday on the swing trades on the entry there. But as far as that's concerned, we'll touch that in a moment. On the menu for today, Euro dollar, Aussie yen, and Euro Aussie. Aussie dollar, obviously, as we just said, sterling, sterling Oz, sterling Kiwi, and dollar yen. Sort of the main pairs that we've been following thus far. If there are any other trade setups or questions that you have at any time, guys, as always, feel free to throw them on the message board. So here is what we look like on the index. It was a beautiful spot that we turned from last week. It was a beautiful area of support that we rebounded from into the close of the week. This week, and certainly the focus moving forward, has been on this range between 93.36 and 94.23. You could see a well-defined high there that we made back last week. The lows converge right onto the 100-day moving average, is slower, the 50% retracement of that near-term rally. So a nice little spot there of support. We're looking for this consolidation break to give out. Favored scenario is that it breaks lower. Now, there's a couple of things, like I said, that have been bothering me as far as what the momentum profiles look like on all of these. You can see this is a clear range bound here on the 240. Even when you get even closer in time, you're seeing 40 start to hold as support, and largely 60 starting to hold as resistance. So suggests that we just have some more lateral flat price action moving forward. Keep in mind, we're heading into, obviously, the last full week of trade. It's going to be a really thin holiday trade as you get into Friday, so liquidity is going to be an issue, which is why when we start to contract in these ranges right into those holiday trading conditions, it becomes very like a high-risk trade. So favoring a downside break. If we do break higher in the unfavored scenario, 94.41, 94.63, area of resistance, you start to look for a larger hold. But, really the focus has to be the respect of this break. So watch 94.23, 93.36, downside break favored. Immediately expect some more lateral price action. I mean, intraday momentum, daily momentum, all just really very uninspiring at this point. So not much to say here on the DXY. Here's what the weekly chart looks like. Again, we talked about this yesterday, the area where it turned from, the low week reversal close from 2016 on a closed basis was a really nice hold. Okay, it was a really nice hold. So if we make it through this long week, 200-week moving average, make it through the median line, that would be the break. That would be suggestive, again, that we have some sort of near-term high in place. But until then, respect that range in the index. All right. So that's DXY. Euro dollar looks like this. Here's what it looked like earlier in the week. Oh, from last night, rather. We kind of cleaned this up a little bit. We were working with the pitchfork, if you guys remember earlier from last week. It was kind of messy on the top side break, so I just broke it down to basics. These basic two highs do give you a parallel that matches these two lows with precision. The upper parallel converges on the 618 retracement, so 118.08, sort of the line in the sand that we would need to clear to kind of give us that conviction that we are moving higher. Here's what the chart looks like now. 1968, still that region I want to see break. Okay, this is the 120-minute chart. Nice divergence into the lows that we made last week. Is that the reversal play? Too early to tell. Treat 1868 the same as 94.20, okay, in the index. These are sort of the levels that we need to be very mindful of. That's key resistance. We want to see 93.30 break. On the flip side of that, euro dollar 1886 is resistance. We want to see a hold above 1737. So if I had to do anything on the euro, I'd want to be long into 1868. Can I initiate a long at this point? I just don't think it's there. Your risk would have to be, at a conservative risk would have to be at 1773, and that's already too far off for me. So if you're holding on to longs, look for that stretch. 1868, do something. Take a little off the table, adjust your stops. That's a break. I think if we do get it, will give us the conviction rally right back into key resistance. And 119.65, guys, 119.50 is still the major resistance level that we're looking at in euro, broadly speaking. That's the gap fill right there, but more importantly, the 786 retracement of the entire decline and the upper parallel. Remember that the lower parallel of this formation was perfect support. So that converges in that region. This is the level that needs to break to mark continuation for the broader uptrend in euro. From a trading standpoint, if I do manage to jump into a long position and we get up into here, I'll be wrapping up 3/4 of that trade, maybe leave a quarter on, kind of let it fly to get the break. But if you don't, or rather if you do get here, make sure that you are considerably lightening your risk, because that's a sort of big zone for euro near term. Questions? So if you'll note, we were talking about 1709 and 1678 of areas of interest for an entry if we broke to the downside. Now that we've made this sort of recovery, I'd be very mindful of trying to get long if we break below the weekly opening range. If that gives out, essentially it's a break of the monthly opening range lows. And that would suggest, again, that you should be looking for a late month low in euro. As it stands right now, we're just sitting in the monthly opening range. All right, let me check this out real quick. All right. Ooh, it touches that high right there. Okay, so 1868 into 1880, you got to actually respect this whole zone here. If this is just corrective, a simple two equal legs would take you a little bit higher into 1886. So I wouldn't start to jump into anything as far as trying to play a breakout unless you break that. Near term, that's sort of the region you need to see break. 1886, 1882. Questions on euro? Hello, Michael. What does it mean when a price tests a level many times, then rebounds from it? Kiwi yen was just visiting 79, then reversed. Does that mean it is a test for breaking or can't do its break? Iman, let me write that down. Kiwi yen, we have been tracking that one, right? In the intraday charts. Are you in a position right now? Let me segue real quick, guys. Hope you don't mind. Let me just take a look here for Iman. So this is sort of like the same trade that I'm looking at with the Aussie and why I bailed. There's considerable stuff to look at. I don't necessarily have a trend line here that it's testing. And if you had to ask me, man, I would actually think this is more of a contractionary range, despite the fact that we're making equal highs. A series of, again, we're kind of just making a little bit of a contraction, a little bit of a contraction on the way up. I think this is sort of something that you want to watch resolve. Once this clears, you either get the breakout towards 80-20, or if the pullback scenario does materialize, you'd really be looking for a drop even deeper into that trend line. But this was a major breakout, right, that we were talking about earlier in the month. So I don't necessarily see anything at 79 per se, but one thing that you want to always keep in mind, E-Man, is that big round figures, 120 in euro, in dollar yen back in the day, 79, these big round numbers. Sometimes you'll see a lot of just psychological reactions. Traders have their limits or stops there. You'll get this whip back. But in general, if it was a trend line, the more times you test it and the stronger the response, the more conviction you have on that on both ends. What do I mean? I mean, Eman, that heading into that trend line, yeah, I'll try to short, right? I'll try to take a short against it. But if it breaks after being tested so many times, those will typically be very strong, sharp, fueled rallies. So definitely you can tell a lot about a trend line or a specific level as price reacts to it. But so you're holding a short off of 79. Yeah, if your stop is against these highs, that's a tight stop. I got no problem with that. I got no problem with that. Just note that you're trading counter trend, righty man? So we want to always be cognizant of that, which means you want to be using lighter leverage. Obviously, this broke out of a multi-month descending formation. The breakout saw fuel and acceleration. So yeah, the broader trend still has us going up near term. For an exhaustion trade ahead of these moving averages, I do think you can get a setback. Same thing with the Aussie. So I think we're looking at the same thing there. Does that make sense, Eman? She says yes. All right. Let me just actually look at this a little closer for you real quick. Yeah, there's just not much momentum here. Watch for that break. Could get a little possible move low. Be very frugal here, though. Okay, I wouldn't be looking for a large swing trade just yet. Looking at this objectively, here's your weekly open, Eman. This is your weekly opening range high. This is your weekly opening range low. So until you clear, that first range they set for the week, just play inside. Make sure you're playing inside. Okay. Sorry about the segue there. So we did DXY was 1, Euro was 2, Kiwi Yen was 3. Let's jump into Aussie Yen, number 4. Well, why don't we do Aussie first, and then we'll come back to Aussie Yen. So here's Aussie. We've been following this one really, really closely, and I guess I'll start real quick with the whole picture. Obviously, we were talking about the reversal here off of a major key support. We noted at 74.76, we stretched that into 75. The low that we actually registered was 75.03. And then this thing obviously made a pretty, strong reaction and closed right at resistance last week, 76.30. We still have to clear this spot. Do you guys see how the congestion zone there? So here's another slope that we've been following. This is the same parallel of the base from the 2016 rally. That comes into play right up here. You have the 52-week moving average. We're at that. And then basic former trendline resistance. 1 touch, 2 touch, 3 touch, 4 touch. The break saw acceleration. Downside break saw acceleration. So this is my concern about being long still. Obviously, we got a great entry last week. We sat in that for over a week at this point. But it looks like it's a little tired here, right? So you know where we are in the broader trend. If we clear specifically 77.50, that's going to mark continuation, okay, of the broader uptrend. Until then, I think it's a little bit vulnerable. Here's the daily chart. And the daily chart also has the 200-day moving average right in that spot as well. And then the 50 line for the current descending pattern off of this year's high is just higher. Okay, so at the end of the day, you're in some tricky territory here. So, like I said, we were in that long for over a week. We took a little off as we were heading to 76.30 because I had no clue if this was going to break or not. Here we are extending even higher. We shaved off a little more at the top. And then this morning, I just bailed on the position as we were coming off of 76.70 again. 16 momentum still has a little room. But broadly speaking, I do want to stay constructive. I'd rather be looking for the pullback now to get back on the long side. And here's my thought process in it. This is the near-term chart that we've been following. Here's what Aussie looked like earlier in the week. We were talking about that region. We wanted to see support here, and we did. We saw perfect support here. Okay, but the reversal couldn't even make it back into the upper parallel again. This is divergence over here into last week's high, but there's no real divergence here per se. These are just equal highs in price. There's no extreme. Still looks a little tired, right? So my thought process is, look, it could come all the way back into 76.30, even the 76 handle. This is where Jamie has the swing entry as an area of interest if we do get a drop here. But do I want to be in the long position and sit through that? Or do I want to just book profits here? And if we get that drop, great, I'll look for re-entry. And as I looked at this and as I broke it down into time frame, you can look at the 120 minute, you can see same sort of waning momentum signature down in the 60, same type of thing. You're starting to struggle ahead of the 60, the 70 threshold. When you're in a strong uptrend, you want to see these breaks in real near-term price action above 70. This tells you that the force is strong, with this one. It shows you that the momentum push is there. So as you start to fail ahead of 70 on the real near time frame charts, you start to get a little concerned. And so even if we break it down to the 30, you can see that last spike was pretty intent on the pullback. So I might regret it, but it was a great trade, 140 some odd pips. So if we drop slower into here, I'll be looking for reaction at 76.30. Ideally, at this point, you get a deeper cut in your 76. Remember, it's been a pretty outstretched rally. It's been beautiful. Came off of an awesome level, just pips away from that 786 retracement. But we have to respect this, whole host of confluence resistance here. So on a pullback type of play, yeah, I'll be looking at 76.30, more specifically a deeper cut, 76, for possible reentry. And that's just basic slope resistance here, or slope support rather, and that same key pivot zone. So we'll see if Aussie doesn't give us that setback and opportunity to get back on the long. Any questions on this? Now, if it doesn't set back, if you're sitting in the long still and this thing just plows through, this is the region I'm watching right here, right on the 77 handle. So big figure, another psychological level. EMN, same thing as like 79 in QEN. If we sail through that, awesome. 77.35, 77.40, and right up into the upper parallel of your next upside targets. But as it stands, a move back to the median line isn't that outside the realm of possibility. Questions on Aussie? Going once, going twice. If you're still sitting in the long, I have my stops just below the 76 handle. If you're looking for re-entry, those are the levels you'd want to be looking for, 76 and 76.30. As far as top side, you need to break through that 77 handle to really open up the upside targets. So that is number 4. Number 5 is Aussie yen, and this is the one that we covered last night. So guys, as far as the Aussie dollar update from Sunday, no change, right? All the levels are exactly the same. We rebounded here, broke lower. Still looking for a move on this parallel here or support at 76 for another stretch higher. Yesterday's update on the Aussie yen. So recall this one. The break here was pretty big, below 87.50. We talked about that. Turned our focus back towards the 2017 open at 84.24. We didn't quite touch it, okay? We turned just ahead of it. And then we were trading within this ascending formation, and we were looking to play the breakdown. And then the breakdown broke below the lower parallels, a fake breakout or a false break. We recovered right back up. And where I wanted to highlight is where we were rallying into yesterday. Pretty big region of resistance, 86.60 into 86.52. Sort of this 10, 15 pip gap region is pretty big in Aussie yen. Here's why. So you have basic trendline resistance. Forget the slope, forget the pitchfork for a sec. Just basic trendline resistance. 1 touch, 2 touch, you'd be looking for a reaction there. But the confluence of that with the 38.2 measured retracement of that range and a 100% extension off the low. So if this is just corrective and the broader trend is still lower, this is the region to look for as resistance. With the same respect, we need to treat this as a clear pivot, meaning If it breaks above 86.60, that would suggest you have a much more significant near-term low in play. And a conservative target would be just 87.64, which has been obviously a clear pivot in price for years. So we're looking for a reaction here. Okay, we're looking for a reaction here. Ideal scenario, it pulls back a little bit, it gives us an opportunity to play maybe a, again, half leverage short scalp on it. But ultimately, this is a pretty big base that we turned from. Huge. And the yearly open, 84.25. Here's what the intraday chart looks like. Even on the near-term charts, just 100% extension from this term advance comes in at 86.52. That converges on this same slope. Now, you might be thinking to yourself, well, do I really want to stress this slope? I mean, Mike, it caught resistance here pretty nice, but what about this? Well, I'll tell you one thing. When you get these false breaks, you still want to pay attention to what price action is doing around that slope. Now, I'll zoom this as much as I can to give you guys a picture of it, but upon examining this, it shows that that gradient, that slope, is still pretty significant. Okay, here's support, support. Yeah, it was kind of messy on the break, but then it was instant resistance, pushed off. When we saw the break of it as resistance again, it became instant support, support, support. Median line resistance, resistance. The break saw acceleration. On the way down, support. And then again, the break saw acceleration, instant resistance. So when you look at price action in the context of what's happening in the near term, that can help you assess, oh, okay, this is definitely a slope I want to pay attention to. And I think in this instance, even though it broke to the downside, it respected that gradient, both on the pivots on either side. So I'm still willing to work with this for now, and it highlights that the median line is basically at that same 10 pip region, 86.51 to 86.62 right here. So the emphasis for resumption of this uptrend, or for this to keep its legs, as it were, we would need to break above here. Immediate target would be 87.32 and 87.64. My base case scenario, or my favorite scenario, if you put a gun to my head, I think you get a little bit of a spike into the slope, possible just exhaustion pullback, and this would be the real test. This is your weekly opening range low. It's the reversal candle high from back here for the monthly opening range, and that basic slope support. So objectively, aside from any of our slopes or anything, just the weekly opening range low, if it breaks to the downside, that would shift the focus lower. With the same respect, I think this might be a decent entry. So if we get the pullback, which is what I want to see, try to attempt a long position off that to look for the topside break ultimately. I do not want to be long from here at these levels in Aussie yen. Okay, it's either a break and retest of this as support, or a drop into here and test to here as support for the long. Questions on Aussie yen? So no change to any of those levels from yesterday, just highlighting that near-term resistance range. We did finally make it there. Look for exhaustion in US trade today. All right. So that's Aussie yen. Next up is Euro Oz. So we did Euro dollar, Aussie dollar. Here's Euro Oz. This is number 6. We first presented this one last week. We've been sitting, we were sitting in a short. I told you guys all I got out of the short as we were heading to this key pivot zone. Obviously, I'm kicking myself now because it did drop into the lower parallel. But at the end of the day, as this thing was opening the week, I wanted to highlight that slope held as the lower parallel in that 5450, 5455's region is still key resistance. You can see a pivot there. I'll show you the real chart in a moment. But the focus for me is this play right here. To get a resolution to that range and see the break. Here's what the near-term chart looks like. Or let me take you a zoom back real quick. Euro Oz. Just to show you. So we're going into that zone right now. But if you recall the previous update from last week, here's what we were looking at. Okay, we broke above that major key region, 55, 54, 54, 55, that key 50 pip region was a massive break, We talked about the possibility of this panning out, possibly as a head and shoulders type of formation. You'd need to see that break. We did get that break. Okay. Now the measured move does call for a drop near 52. I'd slope that up into 52.26, which is the June high. Okay. And you have also slope, basic slope support off the yearly low. One touch, two touch, converges in that region. For that to materialize, we'd need to stay basically back below this region right here. So ultimately, this recovery, okay, here's what the intraday chart looked like last week. We got out, like I said, that key support. We're looking to see this rebound. We went right back into that 55.19 level and it held, and we just slammed lower. Here's what the intraday chart looks like now. Came right back into that 55.20. We slammed right lower, took it right out into the lower parallel. That held, and then this is your weekly opening range setting up just below resistance. So you look for a reaction near 54.55. If that breaks through, you could see a much larger recovery on this. So this is was the favored move in my opinion to play Aussie weakness, since we were long on the Aussie side. A long here would have been a nice hedge to kind of take off some of the losses that you'll be shaping off there. But now that we're out of Aussie, I don't know if I really want to try to press this at this point. But I'd be looking for exhaustion. I'd still be looking for exhaustion today. And especially if we settle today below 54.55, you might still have some more downside to go. So like I said yesterday, I'm not sure there's actually a play per se for us right here. But we have to see a resolution to this near-term range. So look for this recovery that we're seeing right now, 54.55, the median line. Look for exhaustion. If we do make it through that, there's nothing really stopped to go all the way up back into the upper parallels, 56, 56.60. Actually, even on the 240 here, you have a trigger that just gave out. Let me see what that looks like on the 120. Yeah, so there's some divergence all the way into that low. See that? Price action making another low, lower low, lower low. All of these are basically equal lows in momentum, if not higher. So yeah, look for this recovery to kind of lose some steam. 54.55, specifically ahead of 55, is what we would need to see hold. So I'm not in this one, but I want to see what's going to happen near this median line. If it turns lower, there's still a lot of room to that 52 barrier. The question is, we need to get a conviction stop where we're comfortable. I just don't think that's there yet. Questions on Euro Aussie? All right. That is number 6. Number 7, here's sterling. Oh, the pound, the pound, the pound. So what exactly do we do with the pound? Here is what we look like earlier in the week. Okay, so here's the weekly open. 132.89, 132.83 would be a perfect 100% extension, 2 equal legs off the high. You had slope support there. You have the November open just a little bit lower. We talked about pound for a while, guys, and I hope if you missed it or if you weren't in yesterday's webinar, the free session, I'm kind of torn. I want to be long. I can't put it past this thing to make a dip into 32.26, and that's my near-term bullish invalidation level. If we break below this, it's pretty much disaster, in my humble opinion. Look at the formation that we've been in. It's been so clean. The upper parallels here, the median line even, the lower parallel, perfect support, perfect support, perfect support. I could see it dropping there again. That's 32.21. I don't think it's outside of the realm of possibility. I don't want to be sitting in a long, for another 80 pip drop. So I can't advocate a long position here. Even the momentum signature has a little room to the downside before you get worried. So I don't know if there's a play here. I just want to be on the lookout for some sort of near-term exhaustion low. So the weekly chart showing a little more room before we get worried. The levels we need to clear on a weekly close basis, 34.94, the high week reversal close. And then 36.75 and 39.52 are the subsequent topside targets. But it's all about slope support right now. So if you bring this into the daily charts, well, now you also have some major Fibonacci levels that are lining up. Here's a 38.2 retracement of the advance off the lows they made in August. Irrespective of it being that 38.2, it's just been a very nice pivot in price. Resistance, resistance, the break, acceleration, support, support, support. Let me shift that to the top so you can see it. So that's 33.20. Just lower, you had a 618 extension, a 1618 extension. Okay, that's right here. That's from the advance off the yearly low. Touch the perfect high here. Break saw acceleration. That's right lower at 32.70. And then like we just said, 32.26. Basic slope support. The weekly chart shows that. Just lower, you have the 100-day moving average. Right? So I don't know. I want to be long above 32.26. That's all I can say as far as a conviction trade here in sterling. We broke this level in momentum, which again gave you a little bit of a scare. Okay, maybe we're in for a bigger correction. It's since lost steam. We haven't even been able to make a real concerted break below 50. So you think to yourself, if the resolution of this range of basic slope resistance here cracks to the upside, we're going to play the long again. Period. We have to try to get in. But from here, it's kind of real tricky. It's hard to get real bullish just yet. Here's what it looks like on the intraday. And here's what we look like when we started the week. Okay, so we turned higher. The weekly open, that's from last week's. That's not this week's open, so forgive me on that. Let me just delete that pivot there. But at the end of the day, the main focus is still the slope line. So basic slope support. Yeah, same thing as we were looking at earlier on the other side. Even though we broke below it on both sides of the break, okay, you see a response. Break, resistance, resistance, break, acceleration, support, break, acceleration, resistance. So I'm still watching this gradient. That gives us 34.66 as far as slope is concerned, where everything converges. And the lower parallel still highlights basically this region here. 32.26 is still our broader bullish invalidation. So from a trading standpoint, if we get another drop, ideally let's complete a 100% pattern off the high. Look for long exposure. 32.26 being that bullish inval. If it breaks to the upside and just rallies, 34.64, look for a break of both channel resistance and former channel support. Remember, this had 4 touches, 1, 2, 3, 4. So it's a conviction trend line still. And the pivot above that would put us on the constructive approach again back in pound. Could just be a bull flag, That would still put the emphasis on a break above 34.66, which is just Friday's high. Questions on the British pound? Don't be surprised if we do see the ranges start to contract, guys. Again, the market conditions are not going to get better. They're only going to get worse as we get towards the end of the week here. So pick and choose your battles. Okay, that is pound dollar. So a respective look at pound Aussie. That's me number 8 on the session. Looks like this. The whole emphasis on this one was that we were coming into support earlier in the week. And that support basically was pretty evident on a couple of different time frames. Not so much the weekly. I just showed you this on the weekly to show you that the broader picture is constructive in pound Oz. We broke a multi-year trendline resistance off the 2015 high. Very, very basic. And that shifted the focus way up to the upside. You stay constructive all above the yearly open. Okay. That's the broader picture, the weekly outlook from 1,000 feet up. Daily, it looked like this. Basic channel support. Now, you don't have too many touches on this, but the November open and a clear pivot in price was 73.46. Resistance, break, check to the support. That converges on the lower parallel. So basically, you got a real nice trigger on the upside on strong divergence that put us on the bearish break. That move lower is now testing near-term upslope support. So what do? Well, the intraday chart looked very interesting. Here's where it started the week. So the focus for me, and what I told you guys here in the report, is that you want to look for a bounce. The immediate focus is for a bounce. If we're going to get a rebound, I don't know if it's going to break, but if we're going to get a rebound, this is a good spot. Initial resistance 75.01 and the upper 50 line right here. So we opened the week 74.28. We did get the rally into 75, and we did a perfect reversal right off that level. The pullback, look where we found support along that same slope. Okay, so adds conviction on both sides, guys, which means if we break the downside of the slope, now that's an objective break of the weekly opening range low and the weekly open. The weekly open comes right here. Okay, 74. So you have a beautiful 100 pip weekly opening range right above support. Right above support. A downside break. There's your next conviction zone. November open, 50% retracement, 73.79, 73.46. I'm sorry, 73.47, 73.46. Okay, break below that. And again, like I said, this is your targets, but also your bullish inval. This is where we want to start to approach a long position in pound Oz. Remember, the broader picture is constructive, even within the confines of just this 240-minute chart. A basic slope off the lows there has been really beautiful, really beautiful. And although we didn't quite make it into resistance there, if you take that slope and lower it, it's a perfect touch. So the gradient is outstanding. And again, we're getting that response here. So immediate, right now, heading into the US session, shorts are at risk, okay? If you're playing this pair, I would not play outside the range of this 100 pip, or I would not play outside this 100 pip range for now. Once we clear 75 to the upside, gung-ho. Okay, look for the upper parallel, look for a basic 236 pivot. If it breaks to the downside, you know, I'd rather not be short pound per se. I'll play Aussie strength through a different pair. I'd really be looking for the drop to offer better long entries. But as it stands right now, you're at support. All right, so beautiful setup still. No change to any of the levels I presented on Friday. We're right through those right now. You know, just highlight the weekly open here at 74 as near-term support. Questions on pound Aussie? Okay, that's number 8. Number 9 is pound Kiwi. Kind of went on a little pound spree this week. Pound Kiwi looks like this. Similar, but not so similar. Some similarities in that the descending formation, all right, that we were following has been pretty clean, right? As far as pound Kiwi is concerned, this is pound Oz holding basic slope support. This is pound Kiwi breaking basic slope support. So again, these divergences in price action, something to be mindful of. Even if I open up the slope to that low, okay, we broke it. Now recall that I'm using these two lows, and this is the slope that has derived this slope, which was a perfect play, this slope, which was a perfect play, all the way until we got that raised ceiling and turn right ahead of resistance. And again, shifted the focus lower when we've been trading within the confines of this descending pattern since. So what we talked about as far as pound key was the fact that we were coming off that lower parallel, and at this point in pound key, yeah, you should probably look for a near-term rebound, okay? So a rally, look for that initial level at the 50 line. That's right here. 93.52 is your bearish inval. Also an area of entry if the downside's going to hold. So a basic break of support, test is resistance, would be just a basic play. Now, I'm of the mindset that the broader uptrend is still in play here, okay? But we have to respect the possibility of a deeper cut just as far as a correction is concerned. I think I scoped this out with you guys yesterday, but let me just check this again. Okay, so that's actually not so bad. Okay, I'll leave that pivot there. You can see where we rebounded, basically. I didn't even know. Also completed a 1618 extension right off the high. Okay, gives us a little bit more conviction. I do think you get a little bit more of a rebound here before it turns over. But the real test is 93.52. Okay, look for an inflection point there. Questions on pound Kiwi? So number 9. Number 10, I have dollar yen on the list. Here's what the yen ski looks like. The abomination still looking like it could get a stretch into 1309. We talked about this last week. It turned beautifully. We were looking for a 1381 tag. We didn't quite get it. Turned lower. So I didn't get to play necessarily in this one per se, but that was our line in the sand, was the December open at 112.53. Once we broke below that, we want to maintain a bearish stance overall. Now, our bearish invalidation is right back at 1309 again, 1306. That's the 618 retracement of this decline, but also basic slope support. I like this slope. Why? The slope as resistance was almost perfect. Here you got a little bit of a dribble. The break, we turned, literally the weekly opening range highs right from there, converges on that region. So you can envision a scenario where this thing does one more whoop and then kind of turns over lower. I don't know. At the end of the day, dollar yen is still in that godforsaken range. Ideally a stretch into this support is what we were loving to see. But I don't think there's a play here. If we get a 13 stretch, I'll take it. If not, expect this thing just to give more lateral sideways motion. The momentum barrier, the momentum profile on the daily chart is very uninspiring. The momentum chart on the intraday chart, very uninspiring. So for me, it's either a spike high in your 1309, 1306 to try to short it. That's pretty much the only play for me here. I'm not going to try to get long from here and try to play that stretch. So that's dollar yen. All right. So that covers everything on my list. Let me know if you guys have any other questions or trade setups you want to review. I know price action hasn't been all that inspiring. But hopefully things start to pick up a little bit as we get deeper into the week. Nice little bump higher here, Aussie. Am I going to regret that pullout? Maybe not. Oh, gold. Excuse me. So we hit target. That's the last thing I had on the list. That target was 1263 and 1267. So look, this is a big region. We highlighted this support at 1240 literally the day it was being made last week. It's a big region on a couple of different accounts. The 50% retracement of the yearly range, including the December low of last year, so this entire stretch high. You had a couple of different moving average here, the 52-week moving average, the 200-week long-term moving average, and basic slope. Okay, this slope that you see in red here is just a parallel of the broader pitchfork off the 2013 lows. So you can see that slope caught the highs perfectly in 2015 and 16. Again, a slope here is just a measured move. Got perfect support there, little run through, but also converges right there. So we were looking for support at 1240. The broader bullish invalidation for the entire uptrend is now 1204 into 1208. So heading into 2018, that's the level. Above 1208, 1204, we're bullish. End of conversation. Until something else change or get a little bit more time decay, that's the major key support. Heading into the daily chart, it also showed a measured move off the highs as a 618 extension from that decline also gave us 1246. So right off the bat, 1240 was a big region. Okay, big region. We got the rebound. What's near-term resistance? Well, the major pivot zone that we were following for months, and that was 1263 and 1267, both on the upside as resistance, break, support, 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 break, resistance. Now, note a couple of things. The 200-day moving average, okay, this is the daily moving average, 200-day, converges right there at 1267. It's a 38.2 of the yearly range. Also, basic slope support, basic trendline support off the lows from December, tagged again here in July. The break saw acceleration, converges just higher in 1270. So you're coming into an area. What I'm trying to say is there's a couple of different things. You're coming to an area where if you're in long positions, you definitely want to lower your exposure a little bit, bring your stops up to break even or better. This is an area where if the dollar finds a recovery, right, you can envision a scenario where if the dollar sees a little bit more of a strength or rebound here near term, this thing pushes lower, we'd be looking to fade that decline. But ultimately, I can't get comfortable with a real, long bias on gold until we clear this basic trendline resistance. The monthly open comes here at 1275 or so. This whole region, basically. So my point being is the immediate upside rally is at risk here. Here's what the intraday chart looks like, looking at this a little bit more near term. Okay, and here's your December open. So your December opening range high. This is your December opening range right here into support. What do we always say? When the opening range takes shape into support or into resistance, those are usually going to be our best plays. So the emphasis is on a hold here at 1240. Again, like I said, near term, wouldn't be surprised. Here you're marking some divergence on the 240-minute chart. Wouldn't be surprised to see a little bit of a turnover lower, but you stay constructive above 1240, looking for that breach above 1270, essentially. Does that make sense, guys, on gold? It's going to be making headlines soon, I'm sure, once people start taking a look at this trend. Iman says, you are so talented, Mike. Have to say thank you. You're more than welcome, Iman. This dollar yen is a bad omen in the platform. Should be taken out. I personally took it away for a while. Yeah, Iman. I mean, just be very cautious. I joke around and I call it the abomination. We get a good laugh at it, but there's a reason I'm very shy with this pair. It's notorious, it's not a very simple pair. And if you find yourself struggling, guys, with a specific setup, we have plenty on the table, right? I mean, you could just go through SB on the intraday or the swing trades, and there's tons of different setups that you can approach. So don't kind of force the trade. Obviously, dollar yen is a very, very popular trade. It accounts for a big chunk of FX trading in general out of the majors. But I don't blame you. I don't blame you. When the setup is clear, I'm all on it. But when there's any type of hesitation for me and things are acting a little weird, I just tend to stray away. Net dollar yen has not been a positive thing for my for my career over the years. But look for 113.05, look for 113.10 as resistance. That's going to be like a tell if we do hold there, I think, Iman, at least for near-term guidance. All right, and I see your comment there. I mean, someone's going to say something about it. But look, Bitcoin and Ethereum, guys, there's no rhyme or reason, rhythm, anything at these levels, okay? What we're doing right now, or what you're seeing right now, is pure emotion at play. I've run out of measured move. Jamie's got the extensions mapped out, so I'm sure in his midweek strategy webinar tomorrow, he can kind of walk you guys through that. But all the measured moves I had, the last one takes me to 88.82 on Ethereum. This is a trade I have been writing about. The last real topside target, I had a couple of buddies in the city who are aggressively trading this, and they might be mad at me at this point, but my last target for them, or where I told them to take a little bit more profit, was at 622. This thing from here is just sheer emotion, guys. So don't get caught up in the hype. At this point, this is pure speculation. There is no fundamentals behind Bitcoin, despite what you might hear or read. It's sheer emotion. And this is a good time to kind of just sit back and really study how market psychology works. There's really nothing to stop either of these from just ripping into record highs, even more so than 20,000. But the day of reckoning will come, okay? And when it does come, it's going to be sharp. It's going to be really, really painful for a lot of traders. Remember the liquidity issues that you're seeing across the board right now. If you're going to get involved in these, I would not be going the way of Coinbase or any of those online wallets at this point, unless you're looking for a buy and hold strategy. Now that futures tables or futures markets are on the table for this, it's probably a better environment in which you want to get involved, but highly speculative at risk at this, guys. I'm just saying this now because you're not going to see too much. I'm not going to really offer much on the intraday charts on these from these levels until we get some sort of major correction. It's just playing with fire, right? So little note there on the crypto block. It's going to continue to make headlines, definitely right into the close of the year. All right. Well, guys, if there are no other questions, I will go ahead and wrap it up here. I will see you tomorrow morning, same time, same channel. Obviously, Wednesday we'll also have midweek strategy webinar with Jamie right after. So keep that on the calendar. And can we have a quick Kiwi, please? Yeah, sure. I didn't talk about Kiwi today. I'm kind of leaving this one for Jamie right now because I don't think I have a really good grasp on it. But this is what I would say for your question here on Kiwi. Look, the 70 handle into 70.40. I guess I should show you the weekly charts. Remember this. You guys have all seen this one before. And the game plan for me, or the setup, as it were, for me, was the long into 70/70.43. That was the play, in my humble opinion. And you guys know that there was a really clean formation. We talked about it here on the intraday charts at length last week. Okay, here's what Kiwi looked like last week. And even from the beginning of last week, we were talking about this consolidation formation in Kiwi dollar. The topside break to really unleash a rally, take you right into the 70 handle, and 70.40 was the last sort of objective play there. Was this region. So we're kind of testing it, kind of not, kind of pulling back. Here's what the intraday chart looks like at this point. Remember, weekly, that's the level of resistance that matters. Intraday, here's what it's doing. I think you get a pullback off this level. And that was one of the main reasons, Eman, why I was talking about pound Kiwi, because we like pound higher. And the Kiwi rally came out of nowhere, right? This break of this consolidation pattern ripped face. So if the Kiwi is going to pull back and we like the pound long, that's why I was looking for this pound Kiwi trade to find a little bit more of a base support and the rip higher. So we're starting to get that to materialize, keeping in mind that this is still the break of a larger pattern, but the recovery is a really good spot for which this to move higher. So as far as Kiwi is concerned, I do like the upside. I think that we broke this multi-month formation. Yeah, it probably has more juice. Recall that a conservative measured move of the consolidation break gives you a target at 71. Okay, but from where we're standing right now, the resistance level of where we tagged last week, I do think you're at risk for a pullback here in Kiwi. So that's kind of where I stand on this one. Jamie has our stop pretty much, just below the entry, not by much, but he was looking for that stretch into 70.76, and that's a conservative approach, right? 71 is that measured move, but if this near-term parallel does hold, yeah, you could see a setback towards 69.50 even on this move. So a little concerned with Kiwi. I do think you get a little bit of a pullback from here. Does that make sense, man? Oops. Okay, let me clean this up real quick. 38.2 is gonna be right there. I'll leave that. And I just want to check out one thing, guys. Let me just see what this extension looks like. Huh. Okay. I'm going to remove this 100 off the intraday chart just to clean this up a little bit, put things to focus on the near term, exactly what's going on here. So 6968, excuse me. That's a former pivot. You can see support, breakthrough, breakthrough, resistance, breakthrough, acceleration. Same thing on this end, resistance, breakthrough. That converges near term on the 100% extension, gives you like a little range of support here. If this breaks, that's an objective break of basically, I think, the weekly opening range. I think you look for a correction lower. And one last thing would be a basic retracement from the low. See if there's any convergences here. So you see the 236 pops right in there as well. I'm not going to leave it there just for the sake of clarity. Right there. I wouldn't focus on the 38.2. Where's 618? Ooh, and 618 comes right on the October low day close. Interesting. All right. So I know this chart's a little messy, but hopefully this offers a little bit of clarity. So look for support along this median line if we get this break. Obviously, this is the immediate support. Ideal scenario, this kind of holds. But look, it's coming off of the upper parallel. There's nothing, wouldn't be, even if it drops right into the median line, it wouldn't be damaging to the uptrend per se just yet. But I do think the immediate risk is for a little bit of a pullback off this level. All right, Iman says, thank you. Hey, you're more than welcome. Guys, I got to run up in time. There it is. So I got to go from here. But again, I will see you all tomorrow morning. Keep in mind, there's not much Venn risk on tap, okay? So there's going to be a lot of just adjustment, portfolio balancing, and all this nonsense heading into the end of the month. So just, be prudent. Pick and choose your entries, lighten the load as far as your leverage is concerned per trade, and keep your eyes on the majors. There's some interesting levels that we're playing into, and I do think you're going to get a little bit of burst of volatility before we close out the week. Best of luck trading, guys. See you tomorrow. Cheers.